Welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. It's Friday morning. You know, we only get 52 of these Friday mornings, so let's not screw this one up, right? It's a good feel-good Friday. Big news, 131,000 metric tons sold to China overnight. That's good. So we'll start off with that. We've had some non-farm payroll numbers come out today. We beat the high expectations. That's good. And we had some mildly inflation payroll numbers come out. So, all in all, so far off to a decent start. Let's see how the market likes it, say, for corn. We're going to open up in 15 minutes or 13 minutes here. But we're down a half overnight, 5.55 and a quarter and set. But we've got December up about a penny at 5.54 even. I was just talking to a guest before we came on. It's funny. This is the time of year that we too in this business slap our trade screens because we think they might be broken because the prices haven't moved very much. Well, we'll see if we can get that D's corn off that 5.50 schneid soon. How about soybeans? What's happening in the soybeans overnight? Up 8.5 cents on that August contract at 14.11. September up 5.5 at 13.41 and a quarter. Moving right along, Chicago wheat. Let's see what's happening there. Chicago wheat also up a nickel, 5 cents, 7.17 and three quarters in that September contract. 5 cents in December at 7.30 and a quarter. We'll see what the rest of the day brings there. How about Kansas City? Hard red wheat in Kansas City up 6 cents at 6.97 and a half in September. The December contract up 6 and a quarter cents at 7.09 and a quarter, right on those highs overnight. How about spring wheat in Minneapolis? We're up 5 and three quarter cents there as well. September at 9.09 and a half last. December up 5.5 cents at 8.97 and three quarters. Joining me is Brian Hoops from the Midwest Market Solutions. Brian, let's make sense of it all. What do you think about these grains and oilseeds? I know we've got a number. We've got a USDA report next Thursday, and we've got weather to worry about, and that's probably all you had to talk about, and I just stole it from you, so I'll pre-apologize, but what do you have to say?
Hey, good morning, Scott. Good talk with you again. You mentioned the sale of soybeans to China, following up on a soybean sale yesterday. So I think we are starting to attract a little bit more business, and it's good to see because a year ago at this time, we were selling a lot of soybeans and a lot of corn to China, to Mexico, to unknown destinations. So finally, I think we fell to a price level that started to stimulate a little bit of demand for that soybean market once again. We talked about the non-farm payrolls this morning. Overall, they were somewhat friendly, and the dollar took it as a friendly sign. And so the dollar has rallied. And so I'm worried that we're going to see a continuation of the grain market rally that was higher overnight. Now that we have positive news from this export sale and that we have a higher U.S. dollar, we're looking at rains across a good portion of the ice states over the next 5 to 6, 7 days. I'm very hesitant to say that this rally will be extended into the closing bell. I think we could rally into maybe a resistance point, stall out once again. December corn, as you mentioned, just a magnet to that 550 area. I think every day since July 22nd, we've traded 550 on the December corn, and our 21-day moving average has just completely flattened out. It's trading right at 550. So it's that's a market that really could use some direction, as it's sideways directionless right now.
Right. Let's rename it the 21-day moving flat line. How about that? All right, we're going to take a quick break. It's Brian Hoops from Midwest Market Solutions. We'll be right back to talk livestock after these messages. Welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy, and I used to wear this jacket in the pit, believe it or not. And maybe not this jacket. This one, those jackets are a little small now. How's that sound? But how about we take a look at how live cattle went home last night, how we closed. That'll be a good idea to know where we're starting from. We were down $1.47 in August at 122.57. October was down $1.40 at 127.57. So that's how we kind of finished up the day over in that cattle market. Feeders also a little easier on the day, $1.55, $1.55 lower in August at 157.65. September was $1.72 lower at 161.15. So again, little negative pricing there. And with the higher opening in some of these grains, we'll probably see something similar on the open. Wait and see before we call it too early. But how about lean hogs? Sharply unchanged yesterday in August at 109.47, but limit down in October. We'll see how we open up there. That it's going to be a very interesting one. October was $3 lower, 87.12. December right behind it, not quite limit, but 265s, which was 80.87. We'll see how that one opens up. We still have Brian Hoops with us. He's joining us on Skype. He's the president of Midwest Market Solutions. Brian, walk me through this. This is kind of that in-between period, and we haven't seen a ton going on over there. What do you expect to how we wrap this week up in that livestock market?
Yeah, we did see a little bit better cash trade this week in the cattle market. We also saw higher cutout values this entire week. I think next week's outlook for the cash market is steady to higher. So I think yesterday's kind of sell-off started with August finding some hedge pressure, and some of the deferred contracts finding some hedge pressure as well. That really lent into maybe some profit taking on long positions by the end of the day. I really don't read into that technical market too much. I think it was more of positioning with August options expiring today, and then first notice day coming up on Monday against that August contract, trying to align itself so we don't see any deliveries. And I don't think there's any reason we'll see any at this point in time unless August really takes off and rallies once again. But I think you're probably open a little weaker, maybe some follow through. Feeder cattle could be down just a little bit with the higher corn, but then I wouldn't be surprised to see some buying interest start to come into that market once again as we look at next week's cash trade. Could be steady to higher, and the cutout values moving higher.
All right, well, we've got 5 minutes to wait for that to happen. I want to thank Brian Hoops one more time, president of Midwest Market Solutions, for coming on this morning before we open. That was a good stuff, great contact. Thank you very much, Brian. And now it's my opportunity to hand it back over to Janet.